Coin traders, how we doing? Thanks for joining me for the show looking at ICP Internet Computers. So a lot of great upside move, just like we've seen with the rest of the crypto space. And the thing that we did see is that we were looking at higher highs in prices compared to what we were looking at for most of the summer when we were actually topping out at a high of 457.3. So on the current move, got just shy of $5 at 4,959. And so with such a nice pump to the upside, it's typical to see a little bit of retracement and likely be expecting a little bit of consolidation opportunity just to allow a cool down from such big upside moves. So this is kind of similar to what we actually experienced at the start of the year, where we saw a nice big upside pump followed by another slow retracement and then a final peak blow off top. I don't necessarily know if we're going to get that blow off top, but what we're experiencing right now is very similar to what we actually experienced back at the start of the year. And we're going to compare a few things, starting with, do want to look at the 12-period exponential moving average on this daily. So if we actually turn off 12 and 26, you can see right now, been finding periods of closing support on top of this exponential moving average and finding an air gap for it for a lot of these periods of time. In fact, on the run up, you can see run up, a little bit of a flag to actually kick off before hitting the 12 period. Run up, same thing, consolidation, finding a lot of lower support, which is why we see these lower shadows, and then finding that on top of the 12-period EMA. Little bit of wicking down, but yet still found the close on top of 12, and then now currently trying to see a defense of that 12 as well, and for the level for that, we're coming in at 4274. And so if we actually do go ahead and look left here, we do want to draw out a pretty much the heart line for this overall summer move was coming in pretty much right around the $415 level. So if we actually go ahead and draw a price level, that's how you can see that this is a pretty good estimate, since we were finding price level support. A little bit of support here, obviously had this candle wick down when we had this liquidity flush, but looking back before that, previous level of resistance as well. And then also prior coming into this consolidation pattern over the summer, a period of support before the final flush back in June. So definitely a very strong support line to the downside, but currently we are going to be looking at 4268. So zooming in on the current daily setup, you can see that we do match along with this 12-period EMA, as well as a big period of closing resistance before this nice final move to come up to see our current trend high right now. Now, next thing I do want to actually compare for the move at the start of the year was just the amount of rally and downside. So you can see coming off the start of the year, we were effectively looking at a move of about 62% from the trend low to the high. So if we actually look at what we're experiencing currently as well, then you can see from the low to the high about 64%. So on par. And then just like we talked about too, that we failed to mention earlier, did find a nice level of closing support on top of this 12-period EMA. But so with such a gain, we were looking at a pullback of about 20, a little over 20%. And so on the current, if we look at from the high just below $5, 20% would put us back down to about the $4 psychological level, which if we do look at the exponential moving averages coming in pretty much right where the 26 would be, which is typically what we find after a very nice upside moves do slip and lose the 12 period. So on the initial strong pump, that is when prices typically do fall the 12 period. Then once they actually lose that and we do eye the 26 as support, that is typically the next level of support that we find. But yet that also does mean the strength of the move is starting to slow down a little bit, because on the initial upside strength, that is when we follow most closely along the 12 period exponential moving average. So once we lose support on the 12-period EMA, we do look down to the 24 or the 26, excuse me. And typically this does provide a very good support point, just like we found on this liquidity flush. But then like we said, the thing about falling back to that support level is it also does mean that the upside momentum is slowing down. So after we do lose the 26, then you guessed it, we do run into the 50-period EMA. And pretty much when that happens, that does mean that we are going to start to see slowing and probably likely a start to change trend. So for example, on the upside, if we look at this move right before this rally that we were looking at, you can see that initially we kicked off the 12, broke that, kicked off the 26, once again, kicked off the 12, and then finally found it as a point of resistance we could break, and then rallied up to the 50. And then once the 50 broke, that was one of our big confirmation signals that trend was changing. So it also does work in the downside direction, which is why we do need to keep an eye on where these supports actually lie and where they fit into this chart. At a very low point, though, we could be looking at a downside support all the way down to 3652. Like we said, that is going to be our extreme low point of support, though, since we do have plenty of supports coming in before that. And specifically on this move up, we did establish a level of about 4079 as a big point of support, as well as big point of resistance. Also established a big point of support right at 394. So we have a very strong band of support coming in between these exponential moving averages of the 12 and the 26, as well as this very big price zone that we didn't immediately just see a complete rally and blow through. So this does confirm a little bit more of that support levels for this daily chart. Now, if we want to analyze this on Fibonacci's, looking from the low of the move, we can go up to the current trend high right now. So a pullback down to the 50% retracement would be 396. So the 38.2 would be about 419.7, which would be just above the heart line for that move like we mentioned. So in between the 38.2 and the 50% would actually be a pretty nice point to retrace to. Currently, we are stuck up below the 38.2, in between the 38.2, excuse me, and the 23.6. But in these types of moves, it also is possible to actually see slippage and end up hitting the 61.8% target, which is 3.726 currently, which isn't too far above that 365 level that we did look at previously, which was big support, big resistance before finding our all-time low, and then in addition, big point of resistance before blowing past that. Now, so do want to pull up technical indicators here because I want to talk about this bearish divergence that we are experiencing. So did already find our high, and now we're actually starting to see lower highs on this divergence along with price higher highs in this trend chart. So we do know that this is a sign of slowing momentum heading to the downside while price is continuing to trend up. So typically this does mean a reversal, and especially since we have topped out with volumes, we are now going to be relying on some of these lower downside supports to help us confirm where we could be seeing this retracement down to. Now, did actually make a tweet yesterday over on Twitter or X or whatever you want to call it, talking about buying the dip on potential pullbacks. And essentially the point of the tweet or the post was that the dips that you want to buy usually take a while to dip and that there's usually no rush. So essentially what this means is when we talk about buying the dip, you don't want to buy any short-term pullback. You want to actually buy the longer-term moves, because that's what's more sustainable and significant of a pullback to the downside and where you really get the most value from. And so again, if you're not following me here over on Twitter or X, would appreciate a follow. Love coming over and talking with everyone over on Twitter or X. Definitely post a lot more discussions here. And at @coin_trades is the handle. Looking forward to everyone chatting over there. Okay, so we want to actually flip over into the 4-day here. Got a few things to talk about. Specifically, do want to look at volume now. And the thing about volume is that we were actually looking at some of our low trading volume coming in right at the bottom. But once we actually blew past this 4-day, 12-period exponential moving average, we did see a very nice blow through with a lot of consistent follow through, especially on these candles once we actually did blow through the 50-period EMA. And the thing that's actually significant about the move over the last week or so is that this is the first time in this history of the chart that we've actually seen on this 4-day a break of the 50-period EMA on this 4-day chart, along with consistent consecutive follow through for multiple candles. So if we zoom out and look at the rally over the start of the year on the big candles where we actually exploded and broke the 50-period, we got immediate rejection and basically a pushback immediately from the bears. And there was no continuous follow through, continuing to push prices above this once we actually broke the 50-period EMA. So another break, an immediate rejection, another break, immediate rejection. So this is the first time that we've actually seen this candle break with increasing bullish volume, and yet still we did see follow through as well. And especially once we had our liquidity crisis flush, we actually broke both of these, wicked down, and still maintained a very high level of closing support. And so back tested the 50 and the 12 to confirm them as big points of support, especially after being able to confirm them as resistive this whole way to the downside. Now, if we actually pull up the technical indicators, want to look at the RSI Relative Strength Index and the stochastic RSI, because we can see we're almost at the overbought level, not quite at the 70 line yet. And the only other time we've seen the RSI on this 40 chart get anywhere close was just after the start of the year rally, pretty much right around the second week of February, where we did have a top come in at 68.63. So currently we're looking at a 4-day close of 69.24 for the RSI. So basically the all-time high that we've seen for this 4-day RSI. And just like what we had happen on the last time, a pretty quick retracement and pullback, which is what we're looking at right now. Obviously not impossible to deviate from that, but also want to look at the stochastic RSI because we have had now a bearish cross on stochastic RSI after it has been above the 80 line as well. So looking to retrace back into normal levels. And the last time we had that right around the same time period as our previous all-time high for RSI, did have that same thing happen where we did have a bearish crossover reversal, and then that did proceed to have this oscillator get down to the bottom, which is where we did find our price lows come in for that short-term trend. So what does this mean? Well, if we actually look at the price action from where we had our previous all-time high, we actually did get a pretty significant retracement from there. So obviously the thing about that move was that it was only a couple of short candles, whereas on the current, it's a very nice, consistent, slow and steady growth with a lot of that steady increasing volume. So the move is already a lot stronger, especially seeing fall through on top of the 50. So I definitely don't expect it to be as significant as the start of the year pullback once we actually hit our high at 823.7. But with that said, I also see plenty of signs and signals letting us know that we could be seeing that potential longer consolidation and pullback, which could even potentially take us out through the rest of the year. So if we look at where January 1st is, it's definitely not impossible to think that nothing really that significant could happen between now and the end of the year, especially due to the amount of time it does take to normalize some of these longer term charts. So now flipping over shorter term, I want to look at the hourly chart right now. One of the big significant things is that pretty much if we zoom out and look at volume on the bottom, all the big volume peaks have been red bearish bars. So there have been a few here and there, but most of the big significant volume bars have been in fact bearish. That's why you see so many big spikes and peaks of such floods of volume coming in. But the great thing about that is despite all of these huge, big bearish drops, we did still have a very nice solid uptrend leading us to our current trend high. But we know the important thing about shorter term trends is that once we actually lose them, that is when we confirm a top in. So we had our high pulled back, ran up along this 26 period, but failed to break a new high, yet meanwhile slipped and broke to a new lower low. So once that happened, we are now below the 1 hour exponential moving average band. And as you can see, we did continue to hold up and see this exponential moving average zone as a big point of support resistance, so far. And so specifically, let's turn off the 50. You can see we are holding resistance in between the 12 and the 26. So until this breaks, we're going to keep thinking that price resistance is maintaining and price action is to the downside. We zoom out a little bit more there, you can see there's a very nice trend line for the longer term trend that we still could pull back and back test. So even if we do pull back to where we could expect it right now, a vertical drop down would still be about the 405 level, kind of right in par with some of those supports that we've talked about. But even if we do see a flush of this trend line for support, that doesn't necessarily mean that the complete top is in just yet for the longer term, and that we're going to see prices slip back down to new all-time lows. Definitely doesn't mean that, but it does mean that it is going to take a little bit more time to actually start to recover and see those new highs, because that does mean that the pullback does have a little bit more strength to it, and it's probably going to take a little bit more time to play out in order to confirm some of these lower support zones before starting to take back off again. So if that concept doesn't necessarily make sense, please make a note down in the comment sections below, and I would do my best to try to explain it so it does make a little bit more sense. But yeah, with that actually is going to go ahead and close out our show for ICP Internet Computer. Hope everyone enjoyed the updates right now for current price action. Let me know what you think down in the comment sections below. Also comments, issues, disagreements, all that stuff. Do love hearing back from each and every one of you. Also, if you did enjoy the show, please hit the thumbs up, like, and subscribe button so you can stay updated on all types of video updates and content like this. Do appreciate all the continued love and support as always. It means so much. Stay safe, take care everyone, and I'll catch you back in the next video.